is a presentation of TFNN. The Tom O'Brien toll-free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I am having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We had the Dow Industrials down 79. Nasdaq's off 14. S&Ps are off 8.5. Gold contract down $8.20, trading at $1,243 an ounce. Silver off 38 cents at $17.16 an ounce. Platinum down 12 at $1,267 an ounce. Copper off a penny at $3.01 a pound. Light sweet crude flat at $82.81 a barrel. Bonds, you get the 10-year down 8 ticks at 127.12. 30-year off 13 at 142.10. King dollar up 440 ticks at 85.85. Euro down 72 at 126.44, and the yen is up 22 at 107.21. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we're at 1934.23, and close under this 1936.98, folks. Very well could be the start of the ABC structure on the way down. That'll get you a 1750 price projection. That's how this baby is lined up right now. What we're going to have out here today is that you're going to have a higher high. You're going to have lighter volume come in. We take a look at this right now. What you're going to see, we are at 500 million, so it's going to come out around 800 million. The 800 million is going against 1.2 billion. You go to the SPY and we take a look at this, what you'll see in the SPY. SPY thus far is down 113 million shares. You got over the highs of yesterday. You're coming into the downdraft. You're coming into 221 million. The SPY is with 193.52. A close on this 193.65 would be a failure. That would set up two different things. It sets up, first off, a run after the lows that were generated on October 15th. If you get the volume down at that 181.92, then you have a monster ABC structure on the way down. Dow Industrials, we're going to take a look at the Dow. We have with the Dow, that got to 16,653. Right now, we came off 125 points off of that level. You're at 16,529. Inside the Dow Industrials, which is bringing it downtown, you have Boeing is the largest leader on the way down. That's down $5. American Express is second at 123. You get Goldman Sachs at 214, and Microsoft is at 48. Bringing it, putting some points into it, even though it's down, is Travelers is up $1.62. Johnson & Johnson is up 133. Merck is up 52, and Walmart is up 43. The NASDAQ Composite, what we have with the Composite got over the highs, underneath them right now, couldn't handle ice. We're going to have lighter volume. Composite, same type of setup. The setups are in all the indices right now, folks. We go to the small caps. We take a look at the small caps. Same with the small caps. You've got the higher highs, lighter volume. Now the key is going to be how do we go after this B point of that very large ABC structure on the way down. It's 199-point A to B structure, folks. I suspect we got that C in place today. Gold contract. What do we got with gold? Gold contract pulls back $8 today. Light volume. Gold wants to go much higher. They are whacking the gold equities and the silver equities. We'll take a look at the silver right now. So, gold contract itself pulling back on 101,000 contracts. You're going into 250,000 contracts. You're going into 151,000 contracts. That is building cause to much higher price. I suspect we're going to get that much higher price also. That's in the gold market. Silver. We go over and take a look at silver. highly volatile silver. They're whacking silver. Silver's down 40 cents, 33,000 contracts. This 33,000 contracts is also light volume, folks, because you're going into 49,000 contracts. The high of that level is right where we are right now, meaning 17.155. We're at 17.15. Which is the spike from the 15th of October, that got us down to 17.02. You know, that can get tested. We'll see whether that is actually going to break down. Now, what is intriguing is this, is that the gold contract is down 8. If we go over to the dollar index, you see the strength inside this dollar. Dollar index yesterday stopped moving, had some strength behind it. The strength is dissipating in the dollar right now. Now, you have the price. We've done 436 ticks, which is a big number. No volume behind the move, though. This is going into, we're doing 33,000 contracts, going into 116,000 contracts. So we're at 85, 84. The high of what it's going into right now is 86.13. Yes, it could reach that. Right at this point, it doesn't even come close to having enough juice to get up and over those levels. Bond market, the ever-ready bond market. We go take a look at bonds. What we have with the 10-year first. 10-year got down to the sign of strength, which was the 127.07. Oh, this is bizarre. So check this out, folks. It hit it exactly. This is crazy when it does this. Okay, so on the 15th, that was one of the most highly volatile days. Well, that was the most volatile I've ever seen in the bond market. That's when the 10-year went from 127.07 to 130.17. We did 4 million contracts then. We just came down, we tested that with 1.1 million. So bottom line, that's a classic test. That is still saying that, guess what? Bonds want higher price, lower yields. We go over and we take a look at the 30-year. What we have with the 30-year, same setup in the 30-year. 30 is down 12 ticks, 142.10. And at 142.10, when we broke topside, it was 142.13. The characteristic is 1.1 million contracts, and right now you're only at 333,000. So that also is saying, guess what? That wants higher price also. Now, inside the bond market, so check this out. This is I gotta hunt a couple of these to find out what these high yield bonds, the ETF structure, is all about, because this is good. This is really interesting, and what it is, ETF. Let me find this article. Well, what it is this, folks. So the ETFs, high-yield bonds, number one, folks. In order to do a high-yield bond trade, most of those trades take 2 to 3 weeks in order to close, meaning the transaction takes place, the close takes place, the money transfers. What has happened is this, however, is that the ETF structures that are trading high-yield bonds, you and I can get in and out of very quickly, because that's how ETFs trade. But check this out. And this is so the Financial Standards Board, which is the new board that they put together after the crash of 2007, has concerns about it. The IMF has concerns about it. And what the concerns are, and they're valid. They're valid in a huge way. The scary part about this is that most of the time, when the regulators come out and have concerns about it, it's already too late. And this is what it is. If, in fact, buying anything is always easy. Buying a car, buying this, buying that, always easy. It's selling it that's hard. Well, inside that high-yield bond fund, the ETF structures, what they're looking at is that, great, when you want to buy it, no problem, you buy it. Whoever's the sponsor of the ETF goes out into the marketplace, makes the deal, it still accumulates bonds, high-yield bonds. Selling it is a whole different ballgame. Why? Because the fact of the matter is that as interest rates spike, which they will someday, okay? I'm in the camp that they're not going to spike right now, but that doesn't mean high yields won't, okay? Because the fact of the matter is all you need is a few of these companies going BK, because people are giving dollars to many companies that won't exist. That's the reality. That's the high yield bond market. 13%, 12%, 10%, all of the above. Bottom line is that when the selling comes into the ETF structures and those babies go down, What they're worrying about is that the sponsor of the ETF won't be able to basically won't be able to basically get a bid going. So you could have basically crash scenarios inside of that. And, you know, I just read this over quickly, and I'm going to get my head more wrapped around it. But that says to me that, yeah, that's a no-brainer. That can happen in a second. A second. This is Tom O'Brien. This is TFNN. You stay right there, folks. Dow Industrials right now down 93. Nasdaq's off 17. S&Ps are off 9.5. Gold trading at 1,243. Silver, 17.16. We're going to be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. So when we're talking about the high-yield bond market, folks, okay, specifically, bottom line is that when you're trading these high-yield bonds and loans, they're more than just bonds. They're loans also, and that's what this wraps inside many of these ETFs. Bottom line, it takes weeks for the trades to complete. That it sounds bizarre, but that's just how it goes. That's how it's always been, by the way, okay? So I just pulled one up, okay? There's a lot of them out here, but I just pulled up JNK. So that's the SPDR, which is the spiders, Barclays High Yield Bond ETF, Exchange Traded Fund Incorporated in the United States. The fund seeks investment results that correspond to the price and yield of the Barclays High Yield Very Liquid Bond Index. Now, that's what they're claiming. It's very liquid, okay? There's $250 million inside this bond fund, which is not a huge amount. The correlations get kind of interesting, and this is what it is. The dividend information on a yearly basis, this is what's inside the fund. 12-month yield is 5.83%. And if you think, when you're getting that kind of yield, folks, okay, that's a high-risk yield on a one-year deal. There's no two ways about it. When we take a look at what's inside it, there's some that just, when you pull up the first ones, but these are only 0.6% inside them. They're decent institutions. You get State Street, you get Reynolds. Let's put it this way: 1, 2, 3, 4, 5, 6. Yeah, but that's only 5% of the fund. 5% of the fund looks pretty cool. I mean, that's the reality. Yeah, and it is. JNK stands for junk, no doubt. There's no doubt about it. The bottom line, though, is that when I look at this, so check this out. When you're looking at this is a monster ABC down. So the bottom line is that these junk yields are going lower, and there's a high volume spike out there from June of this year at 38.21. Right now you're at 40 that wants to get hit. You come down hard into that level, and that can blow that away in about a heartbeat. So I suspect we are going to have some trouble in those high-yield bonds. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Hi, thanks for taking my call.
Sure. What are we going to look at today?
Yeah, does your Bloomberg terminal have access to the Russell 1000 financials?
I'm sure it has access to everything. The question is finding it.
I don't know the symbol. I just don't know the symbol.
What else?
Okay, how about CB Richard Ellis Group?
CBG, right?
Yeah.
Okay, so global commercial real estate firm, the low's 22, the high's 33, your PE's 18. Okay, so let's take a look. I wouldn't be buying it.
So it's a precursor to another housing swoon?
No, this is not a housing...
Or commercial real estate swoon, sorry.
Totally different deal. Yeah, just so you understand that. There's commercial real estate everywhere. Every single day, not every day, every 3 days, banks call me with a list of properties that are brand new that you can buy for nothing. And some of them are leased, okay? So it's a different ballgame.
So speaking of banks, let's look at Genworth Financial.
Genworth.
GNW.
GNW, right.
Yeah.
This is a dog, too. Yeah, you get Genworth. It's at 1321. It's already gapped down dramatically.
Yeah.
It gapped down from $18.
Why? Why did it gap down?
This was a spin-off from GE, and they always had huge problems. Because they basically underwrote. I think it's part of insurance too. One second. Yeah, it's insurance, wealth management, investment, financial solutions. Huge company. There's no doubt about that. Could
they go bankrupt?
I would say that no, they would not go bankrupt. They were close to bankruptcy in 2008, but I would say that they're not going bankrupt. No.
Could it retest the 2008 lows?
I don't see that. I can see they could, retest somewhere around. There's some decent support right here. Actually, they can get down to $12 or something, but there's pretty good support right here.
Could you put it on the monthly?
It is on the monthly.
It's on the monthly?
Yeah.
Okay.
Okay, man.
Thank you very much.
Have a great one. Have a safe one. He wanted to look at the Russell 2000, which is the IWB. So that's trading right now at 109.89, and these are all ABC structures on the way down, folks. The Russell right now, we're at 107. 101.36 is where, I suspect it's going to get at least tested. See, the way that these structures are, the ABC structure on the way down, depending on how fast we get down there, will tell you quite a bit, can it blow it away? Because the amount of energy, that coming down was extraordinary. I mean, when you look at the number of days, we started off the highs September 19th. We finished the lows on October 15th. Trading days-wise, that was 5, 10, 15. Oh, this is pretty cool. 18 trading days down. Now, we just bounced off that level. We went up 5 days. It looks like today is not going to handle it. And this is a classic today. You get to a higher high, you come into ice, you failed right above ice, and you have lighter volume. What that sets up, and this is typical, folks, of a bear. This came out of nowhere again. You heard, if you were watching financial TV this morning, the whole world saying, it's okay to buy, it's okay to buy, it's okay to buy. It's like, when I was hearing this morning, I thought I'm hearing things, but I know better, okay? Bottom line, I'd love to hear what they're saying right now, because there were commercials on that the bottom is in, it's all clear to buy. That's the first time I actually heard something like that. And what is happening, it's really cool, what is happening is that you are seeing the CNBC in particular turn into a, fast money's turned into a, no doubt, almost like a trading show like we have at TFNN. I mean, that's how this is coming down. It's getting a lot more buy this, do that, do this. In their case, though, they're all bullish on a continual basis. So we'll see where this whole thing does shake out. But what we will have out here today looks like we're going to have a higher price, lower volume, which keeps in place this very large ABC structure on the way down. And the real key is going to be, will it close under this 1936.98? The bulls, the bears, they're all going to be fighting coming into this close here in a big way. Because any technician or anyone that's sitting on the floor there, they know what that number is. And that number specifically has to do with, is there force up at this level? Can they get it over the level and keep it over the level as they're trying to push stock out? My take, of course, is that it's no way. No way, Jose. Why? Just check it out. IBM is toasted, is roasted. Coca-Cola is toasted, is roasted. Boeing is toasted, is roasted. That in itself is like, you got to be kidding me. 3 of the largest stocks in the world, right? Never mind Warren Buffett's portfolio. Let me just look at this for a second, because that's easier to bisect and dissect. People are going to be going after that portfolio because, look at it, it's still up. They're going to go on after it, though. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 114, NASDAQ off 25, S&Ps are off 22. And if we go over and take a look at the SPY, what you have with the SPY right now, folks, we're at 193.16. The number there is the 193.65. We've done 122 million thus far. That's going into 222. So bottom line, can't handle that higher price. We'll see if, in fact, this baby gets into the 192.01, which it can do in a heartbeat. And if that's what we're going to get, you're going to see this gap get filled real quickly in the morning. You can remember yesterday we gapped up. The gap from yesterday is 190.11, and then we had opened at 191.68. That's a big number. Right now, as we're coming into the close, I suspect this S&P is going to go after the 230 low. The 230 low in the SPY was 192.92. So half hour left, and I do expect you're going to see a bunch of selling in this market. Some of the Dow stocks out here, this is what you have. You get American Express down $1. Let's go to Boeing. So what happened with Boeing, this is really intriguing about Boeing, too, because Boeing started real easy, folks, okay? Boeing came out with numbers. Numbers they come out with, you know, basically weren't bad numbers. Lots of planes. Let me see. That's how far up. Okay, so, yeah, not bad numbers at all. So the estimate was $1.97. They came in at $2.14. So they beat their numbers. They boosted their earnings per share forecast, and evidently whatever they said in the conference call just took them south very quickly. Because what you had is that Boeing had opened at a price point of $127.22, jumped down first to $124, got all the way back at 10 o'clock this morning, at 10:40, to $126.98, and then just let it loose. And when I say letting it loose, this is another large cap letting it loose in a high volume way. And if you want to see the clarity inside high volume lows, well, Boeing has one. October 15th, got down to a price point of $116.32, going right after it. The difference is we're going after it with 12 million shares versus 7.8 million shares. We bring this back a little bit further, and this is the big heads up all over the place, folks. The February 5th benchmark that I've been talking about. Coca-Cola's there. McDonald's is there. What was the other one? Oh, IBM blew it away. ExxonMobil blew it away. The XLE blew it away. And right now, we are into it from Boeing. What that sets up, folks, is that's where this S&P is going. You get one by one by one. But in this particular case, this is pretty amazing that you have the largest caps in our market that basically, you know, not only getting taken apart, they're getting taken apart in a huge way. I mean, you're talking about market caps that basically are coming down and coming down very quickly off some big numbers. So let's go to Lou in Nashville. Hey, Lou, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You having a good day out there?
Yeah, not bad. A little rainy up there in New England.
Rainy, huh? Well, hey, listen, the leaves must be just happening right now. Really good, though, right?
Yeah,
are they peaking?
Yeah, they already peaked.
They did? Okay.
Yeah.
Okay.
Yeah. They're just blowing around everywhere.
So what are we going to look at?
Okay, I was wondering if it's a good time to short the E-mini.
Yeah, you can do it right now.
Okay, we'll do it.
If you do it right now, this is when your back's against the wall, folks. You don't have to give it anything, okay? The E-mini right now is at 1924. You know, you can short it going into the close right now. You can put a stop at 1927, 1928. And, you know, bottom line is that this baby, even into the close, can get to 1916, you know. I mean, that's pretty intense for for a few minutes. But what you're going to see here is that this is the type of volatility, the type of market, folks, is that it comes out of nowhere, comes down fast, furious, and then the trapdoor opens. And you never know when it's going to open. So it's always nice that you do something like this and you put your stop right on the other side. Because if it goes up the other side right now, Lou, going into the close, it's going to try to get a little bit higher. So there's no reason to give it anything, which is really cool in situations like that. Right.
What is your target for this? Month of November?
Check this out. It's sick, man. It's 1750, man.
Beautiful.
On the when you're talking the futures, it's actually further. It's probably 2014. $200. It's 1744.
By middle of November or so, I'm going to buy puts.
Well, once it's, let's see, middle of, so you have 22 trading days, because I know I just got some puts on a different vehicle today, but it's 22 trading days till expiration in November. That's not bad. Don't go too, are you going at the money, in the money, where are you going?
I'm going out of the money, about 1850.
1850. Okay. 18. Okay, that's not bad. Because what you have here is this. So watch how this will shake out. The high of the downdraft is 1906. The low is 1813.
Yeah.
So if we turn into a complex ABC, folks, what happens is this, is that if we get into the lows too quick, it won't have enough energy to take it out. But you will get enough energy to go to 1850, man. Because 1850, see, what happened is this. We were at 1850 at like 8:10 in the morning on the 15th. It took a while, and then the trapdoor opened, and we went down to that 1816. Went back up to 1850. Trapdoor opened again, went down to 1822. Yeah, so the 1850 is a decent place, man. Because if you get it that quick, of course, the premium is going to get juiced into that ASAP. And what you do have right now is that the VIX still is not that high as to where, you know, it has been. Right now, we're only up $1.73, and we're at 17.71. Where 5 days ago we were up at 31. So if he goes into that trade, all you need is the volatility in the marketplace, and you're going to get the premium right in that baby again. So maybe then you take half it off or something.
Great, great.
Okay, man.
Okay, thanks, Tom.
Have a great one. Have a safe one. We take a look at the 3 Qs, the NDX 100, and what you have with the 3 Qs, folks, that little baby also, it's going to be interesting if we get harmony across all the indices. The 3 Qs, you need to close under 96.83. Right now we're at 96.45. We did 34 million today, so we're going to probably do about 36 million. That's going at 77 million. So that baby is set up for failure. We go to the SPY. We take a look at the SPY. SPY has done 124 million thus far. You get a close under 193.65, and we're at 193.03. You get another failure. We've done 124 million. You're going into 221 million. You go to the IWM. We take a look at the IWM. IWM has done 42 million. That is going into, what are you doing here? So that's going into 44 million, as well as 55 million. Did we get to 111.03? Yeah, we did. Okay, so we got to 111.06. You're at 109.27. And what that does, oh, this one's going to get really interesting, man. So the small caps are, again, showing that they're not only weak, but if the small caps have a close, folks, under 109.04, that would be, like, intense. The reason being is that that's not even ICE. ICE is all the way up at 109.86. You know, so what ends up happening with test successes and failures in test is that the lower you go after the test, okay, the more bearish it gets. That's how this just shakes out. Because what that's saying is that on a fundamental basis, you have sell and sell and sell, and you know, bottom line is that that's what makes markets go round and round. If we take a look at the tick right now, get a minus 12.03. That was so you get people are getting a little bit nervous, and I suspect as we commit to this close, they're going to get a little more nervous. And you're going to see how the attitudes change like ASAP. But this is a classic deal, meaning that you get a downdraft, fast, furious, you get a fast and furious counter-trend bounce, and that keeps people in the market. We haven't had a correction since August of 2011. We're in 2014. The bulls can make the case that, oh, this was it. The bears can make the case that, oh, no, we're going back to the highs again. That's the classic inside the marketplace, folks, okay? That's why you got to make sure that whatever point of view you have the point of view, keep the point of view, get a trading plan, and keep your money management in place. That's the bottom line. You know, as we're coming into this closeout here, you're going to see the intensity. The intensity is coming up right now in the Dow Industrials, too. Dow's down 148 right now. They'll get this going down $200, man. This is just, it's just like so bizarre. It's unbelievable. We're going to give it all back in the Dow. One day, 6.5 hours, 6.5 hours. It's amazing. This is Tom O'Brien. This is TFNN. Right now, Dow's down 148. NASDAQ is off 38. S&Ps are down 16. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed 5 mining stocks on building real successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow right now is down 147. Nasdaq's off 34. S&Ps are off 16.5. As you come over to our website at TFNN, folks, you're going to see right on the front page. Get started with the path of least resistance. Our man Dave White. We get a special that's going on right now. You can get 30 days of David's letter for just $30, and then you can also lock in the best renewal rate that we've ever offered, which is $95 a month. Check it out on the front page of TFNN.com. Now, let's check out this E-mini. So what the E-mini just did, folks, is just broke the B-point intraday of an ABC structure on the way down. And I know we're at 1922, but guess what? It's saying it go to 1911 now. Right here, right now. And if it doesn't do it right now, you'll see it in the morning. What we did is this. When we were just on break at 1540, we did 59,000 contracts, taking out your swing point of 1923, which had 43,000 contracts, and that sets up 1911 S&P. So it's going to be interesting watching this whole thing, how this shakes out. Let's go to Victor in Paramus, New Jersey. Hey, Victor, what's going on?
Not much. I see the dollar's getting stronger. I was looking at this SPXS, and don't you think this is a setup for next Thursday when they take away the money, the punch bowl, and they set up the big crash? And this will be like the 1929 crash we're setting up for, and then the other people will come back in and invest again once they flush this all out.
Why do you think what's next Thursday? What do we have next?
Next week, I think it's a Fed meeting, and that's when they stop their quantitative easing, whatever. I think they're setting this all up, and this is the perfect time. If you follow the chart from 1987, and we're following the same exact stuff, and according to that guy, listens it from 12 to 1, that the lunar eclipses tonight and all this stuff, you know what I mean?
Yeah, there is an eclipse tonight, right? Is it tonight or tomorrow night? I think it's the 23rd.
Tomorrow. It's the 23rd. But I'm saying it looks like the good setup, no, to crash the market and then get the people on the sidelines come in.
I see the market going down, but I don't see a crash because what I see is going to be one of these razor blade, slow, meticulous, and it's going to be whether it's 6 months, 7 months, 8 months, 9 months. That's how I see this thing.
Why is it going to be 6 or 8 months? The earnings are fantastic, according to everybody. Earnings are fantastic. Everything's great.
The reality is that markets, we don't have, first off, what we don't have out here is something that we had in 2007, 2008, and we're not going to have that, okay? What we had then is that you had fraudulent behavior with the banks, with everyone getting mortgages right across the deal. We don't have that. Right. Okay, what we have here is a market that has been overextended for a long period of time, and a normal. This is what's so sick about this, folks. Okay, a normal retracement, just a normal retracement. So you can make the case for technician folks. Okay, you can make the case that a normal retracement, that there is absolutely nothing wrong with the market. Meaning, on a fundamental basis, you can make the case that we go to 1642. That's only a 0.382 retracement of the move without a correction. That doesn't happen in the market, So a 50% retracement, which a normal retracement, is 1527.
I say 911. We go back down to. It's 911 or 666.
It's 666.
Times that by 3. That's why I told you 666 times it by 3. We hit 1988, and according to the WD GAN 45-degree angle chart, that was it on days and time.
Oh, that's cool. Hey, no, tell me that again. I remember when you said that. Tell me that is really bizarre too.
660 times it by 3, but WD GAN, I can email it to you. Has a chart there. It shows the angle and all that. You hit it like a few months ago. The 220, the 1998 should have been the high.
I see. Interesting.
Okay. But what do you think of this SPXS?
Well, that's a triple, and that triple, you're at 25.92, and it wants to go test the high again, which is 30.83. So it got into a low today. What?
The market's going to open up lower now tomorrow since it's selling off so much. Like overseas will sell off tonight.
I expect it would. Yeah. Yeah, this is a failure. This is the bottom line. You got over the highs, you got up to ice, you have lighter volume, you're closing underneath it. That's where you want to take those trades, man.
All right.
Okay, man. Have a great one. Have a safe one.
Bye.
The Cash S&P right now, we're at 1930, and the close under 1936.98 is saying, okay, you can go after it. What does happen is this. This is where it's going to get interesting, folks, if it turns into a complex ABC. See, because if we go straight down, like right away, tomorrow's Thursday, you go straight down right away to Thursday and Friday, this could stop at 1874. You bounce again and build some cause, because it'd be really unusual that the market could have that much. It could be that weak, actually, to go after the lows and take the lows out in a course this quick. Because what you had is this. You take huge amounts of energy going down. It took a huge amount of energy to go back up, even though we had no volume. I mean, I'm sure money managers were just sitting in heaven, paling this out yesterday. And now they're starting to slide this stuff back out again. And a lot of this, flat out, you know, they're trying to make excuses saying that, okay, IBM's not a tech stock no more. It's like, oh, really? IBM's a tech stock, folks. The bottom line is that they absolutely made crucial mistakes, though, kept buying back their stock. You know, but IBM, you know, this is set up at 161, and, you know, bottom line, IBM wants to, you know, run down to 116. But there's a lot of other stocks that also large caps, small caps, mid caps that have not had a correction in 3 years. And that is what the bigger issue is. And what you want to see and what you should be doing if you're long and strong is just put stops in, folks. That's all you have to do. Just put a stop in, walk away. You will absolutely go bonkers staying long in this market, because what will end up happening is that we'll go down 300, you go up 150, you go up 200, you go up 400, you get down 500, you come up another 150, 200, you get down 600, okay? That's the type of market we're in right now. It's going to be fast, furious, out of control, and all of the above. And the money market, the managers out there are not going to basically tell you to sell. They don't even know what SELL means. They know one thing, BUY. Buy, 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 buy. You never hear any different. And it doesn't matter how many times you get into lows. Someone's selling, folks. That's what it really comes down to here. You don't turn down on the S&P for 19 days straight, going from a price point of 2019 down to 1820 without some intense selling inside the marketplace. And if you listen to the press that's out there, no one was selling and everyone was buying. It's like, oh, really? How does that work? You know, how do you go down 200 S&P points in 19 days straight? That's selling, folks. That's a dramatic amount of selling. Don't forget, folks, you stay right there. We're going to be coming right back. Dow right now is down 151. NASDAQ is down 36. S&Ps are down 17. That's an ABC structure down at 1911. So don't be surprised we open at 1911 or we just run right there right after the close, because we got a lot of numbers coming out after the close. You stay right there. We're going to be coming right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Marlo Giordano. Be strong, go with your heart, and believe in miracles, because anything can and will happen. Market-wise, let's take a look at it out here. We had the Dow Industrials down 153, NASDAQ off 36, S&P's off 13, gold contract down $10.60, traded at $1,241 an ounce. Silver down 42 cents at $17.12 an ounce. Platinum down $15 rather, at $1,264 an ounce. Copper flat at $3.01 a pound. Light sweet crude down $2.06 a barrel at 80.43. Crude wants to go to $75, big number. Bonds, rejected lower price, had lighter volume, came into the break topside from the October 15th level. 10-year, down 4 ticks at 127.16. 30-year off 4 at 142.18. King dollar, up 431 ticks at 85.83. The euro down 69 at 126, and the yen trading at 107.12. Our phone number is 927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Cash S&P, we get to 1949.31. We close out at 1928. Bottom line, you had a failure with price, failure with volume, all of the above. Close under this 1936.98 sets up a run to the bottom once again. You know, we'll see whether it's going to take out that 1820 with volume. If that's the case, you get a 200, well, exactly 199-point ABC structure on the way down, which will take the cash S&P into 1750. Now, if we go into 1750 and we take a look at what's out here, what you're going to see, 1750, folks, is the price point of the benchmark S&P where this thing has been trying to go. The high of the week of February 7th is 1798. The low is 1737. We've already had Coca-Cola down there. You get let's see, yeah, Boeing made it down there today. IBM took it apart. ExxonMobil took it apart. You have these large caps basically taking it apart, folks. That's where that S&P is going. Gold contract. We go take a look at gold. What do we have with gold? Gold back down today. Has lighter volume as you're backing down. We did 104,000 contracts, which is nothing. It's going into, I think it's going into 200, actually. Yeah, 258,000 contracts as well as 150. You know, gold can get into, we're right now, yeah, even 1241, 1238 is game there. Silver, SIZ, silver volatile, get hit hard. Now, silver also had lighter volume, but silver's going to go after its low. You know, the low in silver right now is 1664. Once it got into 17.155, and we're at 17.125, the probability goes higher. That's going to go right after that low bar out here from September 30th. Bond market, well, here, let's go to oil first. For everyone up in the Northeast or in the Midwest, you are going to have some very inexpensive heating compared to what you've had in the past. Yeah, it's a monster ABC down. So check this out. Man, this could be more. So you got a new ABC down. 93.82 is your A. 79, so I'm going to just call it 80 bucks. 13 bucks. Man, $70 oil. This is going to get interesting. Okay, so check this out, folks. Oil had a huge expansion with volume today. We traded as high as 83.15. You're at 80.37. You blow this away, $70 oil. Pretty intense. Inside the gasoline market out here, gasoline right now, unleaded gas wholesale is $2.14. So you're going to start seeing gas right across the country under $3. That's how that shakes out. Heating oil is at $2.46. Yeah, so your heating bills will go down dramatically. And the way you want to, of course, trade that, folks, okay, is for all you folks in the Northeast and the Midwest, if you have those big tanks. I remember when I lived in Boston, I think I had two 250-gallon tanks. Fill them up. Fill them up right now. That's the bottom line. Bonds. We go take a look at the bond market. What do you have with bonds? 10-year first. 10 years trading out here at the 127.15. We did 1.2 million contracts. That was going into 4 million contracts. Rejected the lower price. This is going to make another run for those highs, which is just going to be absolutely bizarre, meaning the 130.17. The real key is going to be, does it make a run again in one day? The yield on the 10-year right now, check this out, is 2.222. How cool is that? 30-year. 30-year bond out here we have with the 30-year. That closed at 142.16. And that's gonna bounce around a little. And this is going to be kind of interesting to watch the 30-year, because the 30-year basically has been stronger than the 10-year. They're both insane how they go up, but that closed underneath this a little. Much lighter volume. You know, it did 349,000 contracts versus the 1.1 million contracts. So bottom line, that also wants to get up and get into a higher price. CTXS, after the close out here, this is the Citrix Systems. That closed down 122 at 64.78. That is trading right now at 61.90. Oh, that's quite a hit. Let's take a look at this. Oh, this is going to be an ABC down, too. Oh, man, I'm telling you, folks, these are all over the place. This is a monster ABC down. So your A point on this is 72. Your B is 63, so you get $9. Your C is 66, so you're talking about a 58. A to B equals C to D. And what we have here is this. Okay, when we put this over in a weekly, what you're going to see, this is going to make a run to this 62.25 area. Let's go take a look at American Express. This is going to get really interesting. Let's see. So American Express, let's go look at Apple first. Okay, Bank of America customers double charged. Let's see what this says. About 1,000 Bank of America corporate debit transaction made using Apple's new Pay mobile payment system was mistakenly duplicated. We apologize for the inconvenience and corrected the issue immediately. All duplicate charges will be refunded. Tim Burke said the bank. The error was attributed to a processing mistake that occurred between the Charlotte, North Carolina bank base and at least one payment network. This will get interesting to see how this shakes out. And in fact, is this network going to be American Express? So we'll see where that shakes out. American Express today, that also looks like it's an ABC structure on the way down. We're at 83.96. Now, that's going to go after the swing low. The swing low out there is the 78.41 area. We'll see whether, if in fact, it can take it out with volume. We go take a look at the dollar index. Dollar had some strength out here today, but that strength was with light volume, 34,000 contracts. So what you have with the dollar index is that you're going into 116,000 contracts, you've done 34. That's saying that to me that the dollar still is in a correction going lower, that, yeah, over a longer-term basis, it does want to get higher. Apple, this is going to get interesting, you know, between banks and Apple Pay and all of the above. Remember, the benchmark on Apple, folks, is the 100.72, and we'll see whether it can close over that this week. The last 3 weeks, it did not close over that level. It's over it right now. 100.72 is the number. It's not going to have the volume. It's 502 million that would have to do volume-wise, and thus far this week, we've done 239 million. So the volume characteristic is not going to be there. The real key is going to be, can it make it price-wise? The new large cap that got absolutely smoked out here again today was Boeing. Boeing took them all to the cleaners, down 567. And what was intriguing about Boeing, it didn't start down. I suspect what must have happened is that it must have been the conference call. They didn't like what they're hearing, and they're trading it down. This is Tom O'Brien. This is TFNN. Dow Industrials down 153. NASDAQ off 36. S&P's off 14. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished down 153, Nasdaq off 36, S&P's off 13. Cheesecake Factory, they just come out with numbers, and what's interesting here is that they missed the numbers big time, but they're not getting smoked. Cheesecake Factory closed at 44.50. It's trading at 43.25, but watch this when you see it. This is where it's going to be subtle. So you get 43.25. You're coming down on volume yesterday and today. Yesterday you came down from 46 to 44. You did 2.1 million. Today you went from 45 to 44.50, you did 2.4 million. Guess what? It's only down $1 right now, but 42.55 is a high volume low that's hanging out there, wants to get tested. And if we put this back a little bit, what you're going to see is that when it went topside, the sign of strength that it had as it started going sideways all the way back to October of 2013 is $42.40. That's where this baby's going. Now, what the difference is, as this is coming down, you have a huge expansion of volume. So we'll see how we hit it. If you hit that with too much volume, that's going to set up 41.02. Numbers-wise, goes like this in Cheesecake Factory. Their estimate was 57 cents. They took in 48 cents. So you had, 9 cents less. What I believe is saving them right now from actually getting smoked in a huge way was the top-line revenue. Most of the time, folks, when you miss the bottom line, they'll punish you. But if you miss the top line simultaneously, you're really toasted and roasted. In this case, they had a larger top line. So what fundamental folks would look for very quickly inside of this, and this is what the top line was, The estimate was $497 million. They did $499 million. What they would be looking for is, okay, what did they use? What expenses went up? That's what they'll be looking for. We're going to take a look at Select Comfort Corporation. This, of course, is in the housing business, air mattresses, all of the above. This closed at $21.52. This is trading out at $24.60, and numbers go like this. So let's see what we have here. The estimate was 40 cents. They tick in 44 cents. That's the bottom line. Top line estimate was $292 million. They took in $324 million. They got some action happening. 21.58. It's trading at 24.50. And at 24.50, that's going to take them over the last short-term high, which is 22.38. That's on the daily. Okay, so what you're going to have here, this equity got smoked in October, last October, just about a year ago. We know, yeah, we're in October of 2014. The high of that is 25.93. That's what we're going to go into. I suspect what it's going to do is going to try to take a bit of that supply line out, but you don't have to jump into that baby, folks. What you can do, you let it gap up there, you wait 2 or 3 months, it pulls back with lighter volume, and then you get some action. And yeah, it's gonna go right to that level. That's where it's gonna go. Marbell come out with numbers. Marbell closed at 34.50. That is trading right now at 33.82. Numbers like this go on Marbell. The estimate was 64 cents. They made 63. It looks like the revenue, they're guiding down on the revenue for Marbell. They saw it. They had guided. Now they now see total revenue up 3 to, it looks like 3, and then 3 to 4%. They were at 5%. YELP, Yelp closed out here at $70.23. This is getting smoked. This is getting toasted and roasted. This is at $62.62. Numbers on Yelp go like this. Revenue. Where is she? Okay, so look at this. These people, they made their numbers, but man, their whisper number must have been a lot higher. So this is what it is. The estimate was 2 cents. They made 5. The top line estimate, revenue estimate, was $99 million. They made $102 million. And the stock right now is down 11%, and it's one after the other, folks. They're all high volume lows. That's what they're going after. Look at this thing just stick out like a sore thumb. So you have the high volume lows from May of this year just sticking out at $49.11. You had hit those lows on a weekly basis with 49 million shares and 64 million shares. Then you go, okay, so that's at a price point of 49. You rally all the way to 83. Now watch this. At 83, you do 86. You do 11 million shares versus your downdraft of 64 million. This thing's not. Yeah, it's gonna go after the highs of the low first. You take those out, and Yelp is going to be in sorry shape. So what are they looking for here? The growth aspect of Yelp. They must be looking. They had to be looking for monster numbers here, folks, because the growth aspect, they made their numbers, but they were looking for a heavier grower. Marbell. Let's go back to Marbell for a second. So Marbell right now pays a 5.343% dividend. At 33.82, of course, that baby's going to go up. We take a look at Marbell. We put this on a monthly basis, and Marbell's in a consolidation. You know, she can get down to 31.74 in a heartbeat, but it's going to be hard to break down 31.74. That's what it really comes down to. It's just pretty neat, actually. And where do you see what you have here with Marbell? Now, this is pretty cool because if, in fact, you have other equities that are coming down like this, Marbell is at the highs of the October 08 bar. And so the high of that bar for Marvell was $29.37. The low of that bar was 20.90. Now, that bar, folks, has so much volume that it's really hard to get into that bar and to break down that bar. So I suspect, yeah, can we get down to 29.37? Yes, we can. Is it going to break down from that level? It doesn't look like it's going to be even close to breaking down to that level. Verizon, VZ, let's go take a look at Verizon, because I suspect most of these, so Verizon, that already came out with numbers, evidently, because that's coming out the 22nd of January. That's the next time the numbers are coming out. You take a look at Verizon, and, Verizon is actually one of the strongest stocks out here, meaning inside the telecom industry. We put Verizon back, you put it back 25 years. Let me see what we have here. You put it back 30 years, and Verizon's going after its highs of 62. That's the way it's kind of set up. 1999. And Verizon pays, I think, a 4.38% dividend at this point. 4.55. So 877-927-6648. Some of the high-volume stocks in a low-volume market. Once again, you had Yahoo up 182. We had Twitter was down $1.55. Microsoft was off 50 cents. Some of the Dow stocks, a couple of them got hit pretty good. Boeing was the big one. That was down 562. IBM followed up 144. Honeywell 176. Coca-Cola flat 6 cents. 3M 198. Oh man, these large caps are getting toasted and roasted, man. Holy cow! You stay right there, folks. We'll come right back. Dow Industrials finished down 153. Nasdaq off 36. S&P's off 13. We're gonna be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. And we take a look at the a few of these other equities out here that got toasted out here today, folks. You have ABC structures on the way down. And, you know, when you see one after the other, that's where we're going. 3D systems that come out with numbers today just blew away a B point. The B point on 3D was 3870. 2.9 million was the volume characteristic. Takes it out with 15 million today. Your A point on this is 53. Your B is 38. So what do we got? $15. Your C is 45. So you're talking about a $30 DDD. That's where that little baby wants to go. CRE. CRE also got hit last night and today, big time, down $5.87. That's almost 22%. This just took away its B point with volume. And this is a classic, folks, that when you get gap aways on the way down, most times you just don't get one of them. In this particular case, we've got 3 thus far from August. The first gap down was from $50 down to $44. You go sideways. Next gap down was from 39 to 34. You go sideways. The next one was last night and this morning, going from 33 down to 27. In CRE's case, we bring this back and you put this on a monthly basis. CRE is number one, is going right after its low of $20.25. And the way it is going after this low, it looks like to me it's going to basically rip it apart and get into somewhere around $12. Thus far, on a monthly basis. So check this out. You're coming into a lower swing point in CRE with 60 that had 61 million shares. We've already done 68 million. You know, and we have, let's see, we got the, what is it, the 22nd? We got the 22nd. And so there's 22nd. Yeah, we get to 7 more days, 7 more trading days. 7 trading days is a big deal. AIRM. Man, look at this. This is just all over the place. So, Air Methods, what does this company do? Holy cow. They provide aeromedical emergency transport services throughout North America. Man, we must be in a bubble here in a big way. So check this out. That closed at $55. That's trading at $44. They're not letting them get out, folks. That's the bottom line. And $44, yeah, you get a high volume low at $45.56. Put this on a monthly. Ooh, this one's a dicey one, too. Oh, this is a close one. Interesting. So this one here is gapped all over the place. Let me put this on a monthly for a second. Yeah, but on a monthly, it got to a higher high, had lighter volume. Well, you see what kind of support this thing will get down. This thing wants to run into the 42 area. We'll see what it gets at that 42 area. I mean, does it get any support at all? Yelp is trading out at $60 now. That's down $10. Yelp can get right to $53 though, right now. That's the number. And remember, when we were talking the first hour, folks, okay, of course, it's always cool that I love doing the program when the market's open because what we had inside the E-minis is that the E-minis took out a B point intraday with volume. So we're at 1925.75. 1911's the number. This thing's going to 1911. And the way this market has been trading after the close out here, it very well will probably hit there tonight. That's the way that it looks like to me. It's setting up right now. We haven't. Let's see. We had one or two. Oh, I know. Hold on, let's go. Let's find TSCO. TSCO. I believe this is up. No, Tractor Supply. Tractor Supply is, yeah, so check this out. Tractor Supply closed at $61.30. That's up 10%. That's up at $68.40 right now. And numbers go like this on Tractor Supply. Their sales are up 5.6%. They beat the forecast. The estimate was 50 cents. They made 55. So that one is up. I believe Select Comfort is up. Other than that, most of these others are getting hit, and they're getting hit pretty hard. Would you absolutely, yeah, let's go look at the Dow right now. What you want to wrap your head around, folks, is that the amount of damage that was done to some of these big Dow stocks. Today, the damage was inside Boeing. Boeing was down 567 with big volume. American Express got hit slightly, but not a huge amount, $1.68. Goldman Sachs was down 335. If we do, hey, so check this out. This is going to be cool to watch. And this is what it is. So picture if you're a large hedge fund, folks. What ends up happening is that very large positions that big managers are into for a longer period of times, it's real easy getting to understand how much the loss would be if, in fact, their stocks are getting hit. Now, Berkshire Hathaway was down $1.32 today. The way Berkshire Hathaway is set up, so check this out. You have a high volume low, first off, from last week, the 15th. So let's say it wants to go to 132. Larger yet, though, you get a high volume low at 122. So that's saying, hey, 122 is game. We put this back on a monthly basis, and on a monthly basis, Berkshire Hathaway can get into $75. Which is insanity, right? Well, it's not much of insanity when you start taking a look at, and this is what large hedge funds would be looking at right now. It's not insanity when you look at the aspect of how Coca-Cola got hit. Berkshire Hathaway owns 400 million shares of Coke, 9.12%. We get into Big Blue, and Big Blue there just kept buying, by the way. And what was intriguing about Big Blue is that, Buffett a couple years ago was basically saying that he liked IBM buying this stock. Well, that was a gaffe. That he just wanted to get everyone else into the stock. But bottom line with Big Blue, he owns 73 million shares, and he had kept buying them. By the way, Big Blue, he was still buying out there as of the last filing. Let me just see if he owns Boeing at all. I know. Hold it. American Express. Let me see what American Express. He's a big holder of American Express. He always loved that company. I'm sure. Hey, listen, he still might. My point here is that what you will see, let's see, AXP. What you will see is that you'll see some hedges, some short positions go on this because it's pretty easy bisect it and dissect in this. Okay, so American Express, largest holdings. Yeah, I can't find him in the largest holdings anymore. Maybe he sold them. Maybe he sold some of them. Berkshire Hathaway, smallest holdings. Yeah, I don't find him in there quickly. But you get the gist of it. The gist is that as some of his larger positions go south, it's a lot easier looking at the aspect of where something is. Goldman Sachs, he owns 13 million shares. So let's take a look at where Goldman Sachs is. I know he got those cheap, that's for sure. But Goldman Sachs and ABC structure on the way down too. You know, Goldman Sachs come off its high of 189, 176 now, has a high volume low of 171. ABC structure on the way down. See, what you have here, on October 15th, what we had is that the financials broke. That was the first time that financials broke. The XLE had already broken. IBM broke. When the financials break, it's a different ball game, you know, because what tends to happen is that once they break, you know, they hit every part of the system. More so, though, this is what it is that the financials themselves, the people that are in the business, what do you think they're going to do? They're going to do everything to hold their stocks up. So when it gets out of control, the selling gets out of control, and it just sell, sell, sell. That is the larger issue, fundamental issue inside the financials, because then the controls are off, the wheels are off the tracks, the selling is taking place, and once the curtain is pulled and people realize there's no such thing as a wizard behind the curtain, then what? The emperor has no clothes. And in this particular case, that's exactly what we have happening inside the market in general. We go take a look at the NDX 100. So what's going to happen, the NDX 100 is going to get intriguing. This is why. That closed, all the indices closed under ice today. That's what they did first off. The real key is going to be, will Apple basically fold? Because Apple itself, okay, is a huge percentage of the NDX 100. The IBB hasn't folded yet. The IBB is at 276. What you did have today is Biogen folded. Biogen was down $17.70 with volume. You know, you broke a swing point, you broke with volume, it's going a lot lower. You know, we'll see where the rest of these biotechs want to basically fold their cards. You stay right there, folks. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Let's go over to Visa. Visa just come out with numbers. Visa closed at price point of $2.10. It's trading at $213.86 right now. They boosted their dividend by 20%. So the estimate, let's see, boost dividend to 48 cents a share from 40 cents. The estimate was 47 cents. So let's see, at 213. Oh, we're at 213 today. It's not going to do much. That's where the gap down had occurred in July. So it's going to take a lot of juice to get Visa over the 216 level. Yeah, you came down with 6.8 million shares We try to get into that today with 2.7 million, and I do expect more than likely you're going to try to get into that tomorrow. But that thus far is not even close to enough juice. Most of the equities down here after the close, folks, down, and they're down pretty good. Varian Medical Systems closed at $80.99. That's trading at 75. CTXS, that's in a monster ABC structure on the way down. That closed at 64.78, down 122. That's at 61.40 right now. The VMW, we haven't looked at VMware yet. Let's see where VMware was. This is not bad. No, VMware, oh, I see. VMware got smoked today. VMware, oh, look at this, another ABC down. Man, these ABC downs are all over the place. So VMware just took out everything today. We bring this back. And listen, okay, so VMware, you know, sliced and diced the February benchmark also. I mean, in a big way. VMware is off its high of 112. You're at 81 bucks right now. And at $81, so check this out. This is pretty intense. At $81, once it got into 84, it's saying it go to 69. That's on the daily. On the monthly, the way this is set up, I have, ooh. Yeah, you're going to 65 bucks. The bottom of the range. That's where it wants to go. ORLY. This is O'Reilly Automotive. That closed at 157. That's trading at 164. Big gap jump up on that. Here comes the numbers on O'Reilly Automotive. The sales are up 9%. Their margin, check this out. Gross margin is 51.6%. That's pretty amazing on auto parts, right? It's good to know, though. Their net was $217 million. In the quarter, 90 days, earnings per share was $2.06. They are looking for the fourth quarter comp. This is pretty good. Fourth quarter comp is from 3 to 5% up. Their sales estimate is $1.8 billion. $1.88 billion. So they're looking at some big numbers. And 157. We're at 164. And this is an equity that are already taken out its highs with volume. All right, this is an ABC up. This has been an ABC up for a long time. So let me look at this for a second. So we put this on a monthly. Well, look at this. Okay, so check this out. Conservatively, 75 is your A, 135 is your B. 75? Yeah. 75, 135, 35, 45, 55, 60 bucks. That gets you 180. Yeah, it's a 180. Took out, on a monthly, it took out the B point with volume. You get 180. So, bottom line is that, yes, we're buying a lot of parts. And what O'Reilly has done is that they have taken over a lot of who was the other? There was another dealer that was out there. They took them over. They're building a bunch of them around here. Bottom line is that it's a big number out there, no doubt about it. We go take a look at Walmart, see how Walmart has been holding up. Walmart right now is at 76.03, and it already basically, oh, this is going to be a classic. Walmart's going to be a classic. The reason being is this, you know, Walmart came off the highs of $79 2 weeks ago. Gets down to 72, so $9, which is a big number, right? Snakes all the way back topside with light volume. So we hit a low, broke a swing point at 72 with 14.3 million. We do 5.8 million today, folks, on the counter trend bounce, going against the 21 million. That's saying that, number one, you're going right back to the low, and you know we'll see whether it can handle that low when it gets back there, or basically break down. So there's going to be a big number out there. Now, let's go overseas. We'll take a look at the Hang Seng first. Overseas is going to be open in a few hours. Hang Seng last night was up 315 points. Light volume. Hang Seng is on a monster ABC down too. Now, what's happening is this. Our own S&P is in 199.8 B structure on the way down. The Hang Seng is 25,300 to 22,600. So it's 1,700 point ABC structure on the way down. And that will bring the Hang Seng somewhere down to 21,000. And I expect what you're going to see. Now, this is what's really going to be cool. If the Hang Seng goes after this October 3rd level tonight, our probability goes much higher that we're going to go after that B point much sooner than later. Because this Hang Seng here will tell us a lot about what our markets basically want to do, because money just moves fast now, folks. It's fast and it's furious. If we go to Shanghai, we take a look at Shanghai, the actual market inside China. That was down $13 last night. Now, that's a lot, but what Shanghai is also going to try to do is get down to 22.93. Now, that would bring it down another $30. You come down there with volume, then Shanghai is going a lot lower. Then, then you're talking a couple $100. UK, we go over to the UK, we take a look at the UK. UK today held its highs. Now, the ICE on the UK, folks, was 64.04. We're at 63.99. If you can't make that tomorrow, that is basically saying that the UK also is in a monster ABC structure on their way down. And see, the UK traded just like our S&Ps. I mean, it's a big one. 68.76 was your A. Wow. It's $600. It's like 10% of the whole index. It's $600. The DAX in Germany, let's take a look at the DAX in Germany. What we have in Germany, same setup. DAX in Germany, the 8-point up here is 98.99 down to 83. Oh, that's a monster also. You stay right there, folks. Allie Ford's going to be coming up next with you with Mindful Living, going to keep you healthy, wealthy, and wise. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, visualize it, step into it, take ownership, and fly with it. Thanks for being here, folks. Stay right here. Allie's coming right up with you.